Welcome to the Ontario Mortgage and Real Estate Insights podcast, your go-to source for the latest developments, trends, and regulatory changes in the industry. I'm your host, Steve Hamoan, here to provide you with insights sourced from reputable news outlets to help you stay informed and make well-informed decisions.
This podcast is brought to you by Real Approved Inc., a trusted mortgage brokerage dedicated to helping Canadians achieve their home ownership dreams. Visit realapproved.ca to learn more about how our experienced team can assist you with your mortgage needs. Let's dive into today's episode.
Today, we're starting with a significant story about the closure of iPro Realty, a Mississauga-based real estate brokerage that's set to shut down due to financial mismanagement. This closure has caused quite a stir, especially since iPro Realty employs around 2,400 agents across 17 offices in the Greater Toronto Area.
It's truly disheartening, Steve, to hear about such a large company facing closure. With so many agents involved, you can only imagine the impact on their livelihoods and the uncertainty faced by their clients.
Absolutely, Janine. According to the Real Estate Council of Ontario, or RECO, an inspection revealed a shortfall in iPro's consumer deposit and commission trust accounts. Initially, this shortfall was about $10 million, but it's since been reduced to $8 million. That's still a substantial amount of money.
That's a huge sum, Steve. For home buyers and sellers, these deposits are critical. They represent not just money, but also the trust placed in the brokerage to manage their transactions safely.
Right. And to clarify how these deposits work, every time a property is purchased, the buyer pays a deposit to the seller's broker. In this case, iPro would hold that deposit in a general trust account. It's crucial that brokerages manage these accounts responsibly because they're holding money in trust for other people.
It's a reminder of how important it is for consumers to understand where their money is going and how it's being managed. Steve, do you know what's happening with the pending transactions at iPro?
Yes, RECO has stated that iPro's new leadership, along with RECO and their insurer, are working to minimize the impact on consumer deposits. They're overseeing the wind-up of operations to complete pending transactions. So, transactions should continue to close as usual, but clients are encouraged to contact their agents or iPro management for assistance.
That's a relief for those already in the process of buying or selling. However, for those who haven't signed an agreement yet, they'll need to sign a new representation agreement with their agent's new brokerage. It's a lot to handle for consumers who are already navigating the complexities of real estate.
Indeed, Janine. It's a complicated situation. For clients wanting to know if their deposits are affected, they should first reach out to their real estate agent. If more assistance is needed, contacting iPro management is advised. The risk is primarily for those whose deals haven't closed yet and whose deposits are still in the general trust account.
And for those affected, filing an insurance claim seems to be an option. They can complete a consumer deposit claim reporting form and submit it to RECO's insurance program. It's important for consumers to stay informed and proactive in these situations.
Exactly. While RECO isn't the insurer and can't determine coverage, they will forward reports to the insurance claims adjuster for investigation. The insurer will then contact consumers or their legal representatives directly. It's crucial for everyone involved to follow these steps to ensure they're protected. Let's move on to an interesting trend we've been seeing in the mortgage market. More and more, high credit score borrowers are turning to private lenders. This is a shift from the past, where private lenders were often considered a last resort for those who couldn't secure loans from traditional banks.
That's right, Steve. It's quite fascinating to see this change. Private lenders and mortgage investment corporations, or MICs, are now reporting an increase in high-quality borrowers. This is partly due to tighter lending standards from the big banks, which have made it harder for even credit-worthy individuals to qualify for mortgages.
Exactly. The federally mandated mortgage stress test has played a significant role here. It's made it challenging for borrowers, even those with good credit, to meet the requirements. Plus, Banks have become more stringent in verifying income, which poses difficulties for borrowers with complex income situations.
And let's not forget about those working in industries affected by tariffs. Banks are scrutinizing these borrowers more closely, adding another layer of complexity. Mortgage brokers are now more aware of the need for alternative solutions, and they're turning to private lenders to help clients who might have previously qualified for bank mortgages.
That's an important point, Janine. Armando Deseri, the chief sales officer at Alta West Capital, mentioned that many people still have a misconception that private lending is only for those with bad credit. But that's not the case anymore. They're seeing borrowers with Beacon scores just under 700 who simply can't qualify at traditional banks.
It's a reminder that private lending can be a viable option, even if it's often seen as a temporary measure. While fees and interest rates are typically higher with private lenders, borrowers view it as a short-term bridge until they can refinance with a traditional lender. It's about achieving specific goals, like closing a purchase or consolidating debt.
Absolutely. Deseri also emphasized the importance of mortgage professionals understanding the full spectrum of lending options, from A and B products to private lending. This knowledge helps them position clients for the initial mortgage and plan for future refinancing with traditional institutions.
With the current economic uncertainty, it's likely that we'll see even more borrowers turning to private lenders. Banks are unlikely to loosen their lending requirements, so private lenders could fill the gap for those needing bridge financing or looking to tap into home equity during tough times.
And as more people explore these options, brokers who haven't dealt with private lenders before are learning to navigate this space. They're figuring out how to structure deals, position themselves with clients, and develop exit strategies to eventually transition clients back to traditional lenders. Now let's turn our attention to Brampton, where real estate prices have hit a near 5-year low as of July. According to data from the Toronto Regional Real Estate Board, the average sale price for all dwelling types combined was $909,448. That's the lowest since December 2020, when the average was $869,107, right at the height of the COVID-19 pandemic.
It's quite a shift, Steve, especially considering how the market has fluctuated over the years. For many in Brampton, this decline could offer a glimmer of hope for affordability, especially for first-time homebuyers who have been priced out in recent years.
Definitely, Janine. On a year-over-year basis, the average price for all dwelling types in Brampton dropped by 10% compared to last July's average of just over $1 million. Detached homes in particular saw their prices fall to an average of $1,072,451, an 8% decrease from last year.
It's interesting, Steve, because while prices have been decreasing, overall sales in Brampton have actually risen by 12.3% compared to last year. This suggests that lower prices might be encouraging more people to enter the market.
That's a good point, Janine. Improved affordability, along with lower borrowing costs, seems to be translating into increased home sales. CHAR-EB President Alekia Berry-Sproul noted that more households are finding affordable options for home ownership.
And that's crucial, Steve. The housing market's accessibility can really transform lives, allowing people to build equity and stability. But it's also essential to consider the broader economic context. Jason Mercer, TREB's Chief Information Officer, mentioned that the Canadian economy is treading water amid trade uncertainties with the United States. Promoting growth in the domestic economy, particularly through the housing sector, could be a catalyst for regional economic growth.
Exactly. While the sales numbers are rising, it's worth noting that they're still significantly lower than the all-time high in July 2020, when there were 1,167 transactions. This July saw a 62.5% drop from that peak, aligning more with early 2000s figures.
It's a reminder of how volatile the market can be, Steve. But with more households finding affordable options, there's hope for a more balanced market moving forward. It's about finding that sweet spot where prices are manageable for buyers while still supporting sellers and the broader market.
Absolutely, Janine. As we continue to monitor these trends, It will be interesting to see how the market adapts and what this means for both buyers and sellers in the coming months. Thanks for tuning in to another episode of the Ontario Mortgage and Real Estate Insights podcast. We hope you found today's insights valuable as you navigate the world of mortgages and real estate.
Before you go, a quick reminder, Real Approved is here to make your mortgage journey smoother. Whether you're buying your first home or refinancing, their experienced team is ready to guide you with personalized support every step of the way. Visit realapproved.ca to get started and take the next step toward achieving your home ownership goals. Catch you next time and stay informed with the latest industry insights.